You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out with the rockin'est show in the world of options. Let's see how many times I can say rockin'. Yes, it's time to rock out with the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, at least we think so, Options Insider Radio Network. You guys know how to get the full kit and caboodle by now. Archives, deep dive, 10-plus years of great content. Easiest place to do that, our website, or indeed our mobile app. Just search in your app store of choice. If you want to just subscribe, let it come to you at your leisure, then, of course, iTunes, TuneIn, Stitcher, Pocket Cast, all those great places to do that. And, of course, if you want to get it in your ear holes immediately, Mixler.com every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. Hit us up, questions, comments, insights, pearls of wisdom, all that good stuff. We do, yes, we do enjoy hearing from you folks out there. I shouldn't just say guys and gals, all folks out there like to listen to the old show. We welcome you. And, of course, joining me on the old program today, let's spin the old option block all-star panel wheel. See who we got. Let's start off. We are now heading to the quaint, tranquil, quiet shores of Maine, listeners, where not much is going on except the horrible murder of pediatricians by throwing them into the ocean. Yes, we are joined by none other than the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Bit of a back reference there, listeners, or Andrew. Listeners have to go back and check out some old episodes. See what the heck is he talking about? Murdering pediatricians? What's going on in Maine, sir?
Well, we haven't thrown anybody into the water lately. However, it is getting sunny enough to jump in the water actually in May. So it is looking up over here. Things are okay. Things are good.
Except for the horrible. Is that pediatricide if you murder your pediatrician? I don't know if there's an official term for that. Well, maybe we'll have to coin one here on the show. And you got regicide, fratricide. Why not pediatricide? Why not?
I'll tell you. All I know is the Twitter sphere will be erupting that the Rock Lobster wants to get rid of all the pediatricians in Maine. So
I always knew you were anti-vaccine, but not this. You're going too far now, sir. You've gone too far. You've taken it beyond the pale. Let's move on over to a more quiet, more tranquil, even more so than the coast of Maine, listeners, part of the city where everyone's just hanging out, climate controlled, temperature controlled, weather shield, eating some delicious Skippy Zeros and lemonade. We are joined by none other than the Uncle Mike Tosaw from, I believe, RCM Wealth Advisors. Let's check in and see if that's the case. Mr. Uncle Mike, how you doing, sir?
Doing well. Enjoying life in beautiful, sunny, scenic St. Charles, Illinois.
Indeed. So it will be RCM for a little while longer. We'll keep that ball rolling. We love and enjoy our folks over there at RCM. While Uncle Mike's got a lot of fun stuff in the works coming to you hopefully soon, listeners. Meanwhile, speaking of things that are coming to you that we think are fun, it's time to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the old trading block. This is indeed the portion of the program where we break down what the heck was trading, what was going on, what was lighting up the old collective tapes. Bit of a quiet end to the old session with most of the markets. They're looking green for most of the end of the day. End of the day, kind of mixed. S&P slightly ticking into the red towards the end of the day, but just barely. Not quite much to write home about. The rest of the major indices up slightly on the day. Kind of a big shrug day, especially given the fact, surprising given the fact that, what we saw out there in the Middle East and other areas where some issues were, of course, were ranging. It doesn't mean we didn't have a bit of a range, though, on the old S&P. Had looks like about a 17-handle range intraday. Got down to as low as about a couple of handles off from where we closed today and got as high as 27.42 out there. So interesting stuff out there in the S&P land. All this back and forth means VIX cash actually taking a little bit back today. Taking a little bit of the weekend, perhaps, and then some up. Right, closing almost exactly at the 13 handle, 13.00, almost exactly out there. Up about a third of a handle out there. Don't worry, though, all of you out there, though, who are looking for some nice, juicy VXX erosion. It continues to erode off another about 3% today. Shy of the 35 handle now. Oh, how that erosion, when it kicks in, it just kicks in so quickly. Got to catch it. Got to catch it. It's like a Pokemon. Got to catch them all. Mr. Rock Lobster, you and I were talking before the show. I just came from a big retail-focused education event. I had to run out early, so I didn't get to see all the sessions. But it's good to see groups like FIA actually taking an interest in retail education out there. And it's kind of funny because I just came from the big options industry conference, too, where you guys are hopefully listening to it as we speak. Well, maybe not as we speak, but after this show on the old network about all the stuff we talked about with a lot of the heads of the different exchanges, brokerage firms, trading firms, vendors, etc. All talking about big issues like liquidity and how perhaps it's not so great in the options world right now. And I just came from this retail event, Mr. Rock Lobster, with an educator from a firm I wasn't really familiar with, who shall not be named, who made some glowing, how liquidity has never been better for the retail customer. And he, to an extent, he is right. You trade in those top 10 or 20 names, you're looking pretty good. But beyond that, and he was even saying, even beyond that, you can still get filled mid-market and all these things. And I was like, wow, I wonder what magical options world this guy lives in, because I want to go there. It sounds very nice. So there you go, Mr. Rock Lobster. Your cohorts are out there spreading dissemination hither and yon. I think maybe you should come down here and set that fellow straight.
I'm not exactly sure. I mean, if they trade like the top 10 products, maybe, but I think liquidity in other places is not that great. So, if you trade Apple all day, I think it is. I think it's a trading zone. If you trade the SPY all day or the Qs, I think that's a trading zone in some of the top stocks. But, we're trying to get something done in Tesla or some of the other names. I don't know exactly where that person is, what the list of securities they're trading, but I'd sure like to know. But the big stuff, I'd say the big stuff is pretty liquid, and there is competition for lower fees. So, I mean, I think those parts of that narrow area is still is good. But for the other 3,000 names or something like that, I don't know if you get that kind of liquidity. That's all.
Yeah, I don't know how credible this guy is. He also claimed to have like 20,000 people engaging with his educational firm for mostly options on a daily basis, which, A, I've never heard of his firm, and B, you think I would have, and then B, 20,000 people, that would probably make him the biggest educational outlet for options, certainly on the planet, probably bigger even than like CME and SIBO and some of the things they do out there. So, yeah, and maybe not the best source out there, but still, I thought it was interesting. All that aside, Mr. Rock Lobster, dubious educators, we know there are many of them floating around out there, and that's why we have you guys on. We kind of like you guys for the most part. That Sebastian guy, we'll let him sit by the side. He's kind of crazy, but we kind of like you for the most part. So what was catching your eye? What zone are we in VIX land? Are your crazies happy about VXX erosion? What was going on in pit land today, sir?
The crazies are happy about pit erosion. The vol newsletter closed some more volatility puts. So that part was good. I think we have kind of a normal erosion, at least what I deem to be normal erosion for the vol products. And you can see that kind of like every day is a dollar down day for these things at this point, or not every day a dollar down, but I mean, we're at a kind of a funky spot right now because VXX is almost all of June. So it is very sensitive, and they just killing the June future in VIX. Really taking it down to the low 14s today. I want to see where it closed, but it certainly couldn't have closed very well because VXX is down $1 on the day. So they're really crushing. It's one of those things where they are hitting almost anything that has to do with vol as much as they wanted to own it. You know, the market wanted to own it not too long ago. They don't want it now. So I think they're running a little bit ahead of that. So, I mean, there will be a time when the vol futures stop dropping because they get to a point where it's hard for them to drop anymore, given where VIX cash is. So, I mean, I think we're kind of at that point right now. I would not be surprised to see. We'll see what happens to VIX tomorrow, but they are really. I mean, the June future is only $1 over the cash. They're $1.40. That there's not a ton of premium in there. So at least the futures are saying VIX cash should be going a lot lower because it's been a while. I think this is the first time since, I'm almost positive, since January, that a 30-day future has been in the 14 handle like this low. I have to check and make sure, but you know, maybe we said early January, you might have had the February futures because we had like a 10 handle, so like 12.5. So yeah, since early January, first couple of weeks. So it's been months. I mean, here it is 4 months later. So we've had higher vol, and now the market doesn't want higher vol, or it's not, nobody's paying for it anymore. So it'll be interesting to see actually what happens at this point. And there is some Middle East stuff, but I don't think it's, and I think really what's happened is, at least for right now, because, you know, moving the embassy and all that, like, you know, everything political can turn to volatility in a second. So if you watch volatility, you kind of have to watch politics to some degree. And I don't think we're getting, while there is unrest and missiles flying and stuff like that, I don't think the market is not seeing it as overly, at least for right now. It's probably less than expected after pulling out of the Iran deal, because we had that little pop of volatility, or we had that bid for vol last week on the announcement that something was going to happen. And then, you know, and then the 1-2 punch, and then moving the embassy to Jerusalem. But I mean, both of those things, politics, not trying to get on the political side and inflame people, but, you know, the market volatility looks at politics. And I think right now, most of it has been a lot less than was expected, at least by where the VIX was marking last week. And I think, let's see, hard to believe, okay? Actually, it's not that hard to believe, but today is Monday, and Thursday of last week, VIX traded 1853. And it is traded 1265 on a low. So that is a 6-point or 5.5-point drop in VIX, which was pretty enormous. And at least for right now, it's not getting off the carpet. So I think, you know, our joke about the single-digit president, you know, it's working back in that direction, because at least there's now less vol or less reaction than I think players were looking for, and that's enough to take the vol down. And I think they're taking the June VIX future down aggressively, and with it all, everything connected to it.
See, we were right all along. You know, Trump really is a single-digit VIX president. You know, bellicose bluster aside, saber rattling, trade war rattling, just about every type of rattling you could do, he has done. And, you know, nuclear war with North Korea rattling, you name it, he's done it all. And yet here we are, you know, right back down. Not quite single digits yet, listeners. Let's not get ahead of ourselves, but we certainly are ever so precious, some might say precariously close to those single-digit VIX levels. Mr. Rock Lobster, what VIX zone is that? Is that zone -6? What zone is that?
The secret zone? We are actually closing in zone 1 for the second day in a row. We closed today at 1293. We closed Friday at 1275. The whole weekend markup got totally absorbed, which means implied volatility actually dropped a little bit. So we are in zone 1, and the bottom of zone 1 is, at least after last year, a 9 VIX, 898. So we are now looking at a new zone with which to travel down in, and what the performance of the vol products are then. So I think at least the quick, easy money in the vol products sort of have been made over the last week. We actually had some pretty aggressive short vol positions. And most of them are off as of today. We still have a little left, but that's the deal. So now we're sitting and waiting, and things are kind of flatlining, and I'm looking more at the SPX and kind of time spready stuff in there at this point. But it doesn't mean the vol products can still just sort of kind of creak and crunch around. And the thing with the zones are, once you're in a zone, you could always go to the bottom of one once you kind of start anew. So there could be a trek down to the bottom. You could still get to a 10 VIX in a week and a half if nothing happens. It doesn't take a whole lot to get there. And the market's also kind of stopped going up. What was our high? Like 28, almost 2,900. So it's not that we haven't rallied quite a bit from, at least even from last week. I think we're up 100 handles. It's just things they're starting to slow down a little bit, and slow down in underlying movement is the killer of VIX, and that's what we have. So I think it'll be happy for Tosaw, although he's not going to get very much for the puts he's trying to sell. So he's probably going to put his buy and call hat on in his strategy segment, if that's possible. But that's what we see. And the only thing we'll talk about Tesla in the odd block.
I don't know what this Tesla is you speak of, sir. I'll have to educate myself here while Uncle Mike is talking. Speaking of which, Uncle Mike, if you would like to throw out some topics for our people to vote on, for you to discuss later, we can do that. Or, of course, if you want to just go with one, that's fine too. And speaking of which, outside of your educational topics, which will be coming in about 20 odd minutes or so, what else is catching your eye here today?
Well, I think that this is just really showing how we have an interesting interconnection with a lot of things that are happening. Like that song about the human body when you're a kid, the knee bone's connected to the thigh bone. So now it's like the VIX is connected to the Middle East connected to oil prices, oil price connected to the U.S. dollar connected to interest rates. So I mean, it seems like everything is becoming so insanely interconnected right now. One thing happens and a lot of things are affected by it. It's very unique, I would say, at least at this stage of the marketplace. Because if you look at today, we started off, we gapped up a little bit. We have peace in North Korea, North Korea is going to get rid of some nuclear bombs or their nuclear testing site, and we have peace. Everything's going to be good. And then we have the ceremonies that were happening today with moving the U.S. Embassy to Jerusalem and Israel. There's some turmoil over there with things that are going on over there when that's going on. So we have a lot happening. We have the Fed might be raising rates again in June, is what the consensus is at this point. So there's a lot of things that we have that are interconnected at this stage within the marketplace, and combine that with the fact that we've kind of had an energy-driven rally recently. It's a pretty unique rally once we are down from the all-time highs of the marketplace. So in terms of today, the two things that we had that were up on today, we had, of course, two sectors that we had that were up on the day. We had energy as well as healthcare, and everything else kind of ended the day flat. The other point of note to make with this is that, yes, today in the S&P we were up a fraction, but the other thing to mention on this is that we have actually come from a low 10 days ago. On SPY anyway. SPY, the low 10 days ago was 261, and today we're around the 273 level. So we've had the bulls have been in charge quite a bit the last 10 days. And to actually have a day like today to where we're flat or we're not having a major rally, I think you could say it kind of bodes well in that at some stage in a rally, you're going to have a down day. And the fact that the down day isn't that big of a down day, or it's a flat day, kind of like today, I think it's a pretty good sign, quite frankly, but I'm kind of biased in terms of my bullishness. I'll be the first to admit that. So, but with that, we have a lot going on, and a lot of things are kind of interconnected. It's kind of like in the old Tom and Jerry cartoons when Tom and Jerry's trying to get that mouse, and he comes up with this crazy contraption to where he drops a marble, and then the marble goes one area, and all these different things happen to eventually try and trap the mouse. That kind of feels like what's happening in the macro sense of the market these days.
Indeed. Speaking of macro, we like to sometimes break up the macro with a little bit of micro. Not a heck of a lot cooking right now on the earnings front. I would recommend you guys, if you haven't checked them out, we got another cool earnings report breakdown coming out of ORAT, so you can find it on the old optionsinsider.com. Head on over there. You'll see it on the homepage. Of course, follow us on social media. We'll tweet out a link for it. You guys can check it out. Breaking down some cool moves and some upcoming names. Uncle Mike, cover your ears. Got Cisco coming up in a couple of days on the 16th. Later on this week, got Walmart on the 17th. Looking at some other names here that are of interest. Cisco looks like, according to the analysis here done by ORATs, they're pricing in right about $2 right now, so a little over $2 stock. At the time this was written up, right around 46. The past straddle that they priced average going into earnings has been about 210, so it's slightly undervalued, at least right now. The historically projected move was around close to $3, 292. The actual move that they actually achieved was right about 2.25. Same quarter, so this same quarter in past years, they've averaged about $4.31. So this perhaps is a robust over the last 12 quarters of the same quarter, so last 12 years. That's a pretty robust move there. The same over the past year, though, the past 4 quarters, they've only averaged 220. So it seems like the straddle's right in line, maybe a little bit under what they've been averaging. It shows here right about 4% undervalued here. So they're pricing that one. It looks like pretty narrow down there. Otherwise, Walmart though, they're pricing in $389. The stock was at about $83.40 when they put this up. Again, you can read all this for yourself over there at the optionsinsider.com. They've averaged straddle price lately was $291. Which is this one's, shall we say, a little bit loftier. The average projected move has been about 330. The past actual moves has been about 332. So this one looking a little rich. Same quarter moves have been about 282, actually, so a little bit less there. Over the past year, the name has averaged about 375 per quarter moving, so you can probably see where they come around to that 389 number out there. And they're saying this one looks like about 25% overvalued here, which is kind of interesting. I'm sorry, undervalued, according to this analysis here on ORAT. Check it out again for yourself. There's a lot of other tickers in there. Home Depot, a bunch of others in there you can take a look at. There's other ones you can go back scrolling through the history. Just search for ORATs, ORATS. Really cool stuff. You guys have always asked us, who does this analysis? Well, now we got some for you, and guess what? It's free. So check it out if you're out there slinging earnings. Meanwhile, we're going to sling some oddness because it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down what the heck is going on the weird side, the wonderful side, the just crazy side of the market. We like to kick things off. When you're talking crazy, you can't do much better usually than Tesla, Mr. Rock Lobster's favorite name he was talking about a little bit earlier. I've educated myself in the interim there, Mr. Rock Lobster. And we also like to talk, of course, about these funky mystery puts. Tesla, by the way, of course, if you weren't watching today, selling off about 3%, about 9 handles, so another downside, back well shy of the 300 level, right around 292 to wrap up the session here today. But we like to look a little bit farther out and a little bit farther down, listeners, all the way out, starting with our old friends. Oh, yeah, they were lighting it up again today. The mystery puts, the Jan 2019 50 puts, 55,600 on the tape as we're talking right now. A whopping nearly 1,000 hitting the tape again today, 953. So these things continue to print, continue to dominate the Tesla open interest charts. It's just kind of crazy town how much love there is for these things. Also worth noting the 20 puts, about 56, over 8,000 already open on that strike as well. Then we go back out to Jan 2020, where the 50 puts also active again. 251 going up, about 14,000 open already on that strike. Nearly 200 hitting of the Jan 2020 20 puts. Say that 5 times fast. Almost about 6,500 open on that strike as well. So size open positions here on all things funky Tesla. Speaking of funky, let's move on. It was a crazy day. In addition to the Middle East stuff, you may have seen, listeners, Supreme Court putting the old smackdown on what effectively has been a Vegas monopoly for a long time, or a Nevada monopoly on sports gaming. Hence this crazy quasi-betting things that have sprung up like DraftKings and others, or the fact that we're sending billions of dollars to these offshore sites because we can't do it here. Supreme Court may be smacking that down. We still have a ways to go. It has to be, passed in individual states, or Congress has to do something on it. But it seems like we're paving a path to finally having some sort of legalized sports wagering here in the U.S. As you might imagine, gaming stocks taking a nice little lift off that, including Caesars, ticker symbol CZR, closing today $12.55, up about 5.5%, or 65 cents. It's the name that averages about 13,000 contracts a day. So they're actually pretty robust for an odd block candidate. We talk about names that do 200 contracts a day, or 12. So 13,000 is a lot. Today, doing nearly 100,000, 97,000. As you might imagine, about 22.5 to 1 calls over puts. And it was kind of a pick your poison out here in terms of which calls you liked. Pick a call strike, pick a month, and you probably had some action on it. The ones that dominated our attention were the May 13s, expiring on the 25th of May. These are the weeklies, obviously. We saw a 10,000 lot going up for 40 cents earlier, and today just lifting the offer on these bad boys. Just gobble like Pac-Man on these calls. A total of 18,563 going up today. So remember, I said 97,000. Roughly nearly 20,000 of that 97,000 come in on this one strike here. But it wasn't just there. It was calls pretty much across the board. The 12 halves expiring on the 8th, doing about 5,000. 13 halves doing about 2,000, also in June, expiring on the 8th. 24,000 of the 12 calls expiring on the regular monthly Junes, lighting it up. So clearly, almost 3,000 of the 13 calls in July, going up 5,500. The set 14 calls. Pick your out-of-the-money call strike. Oh, the D's 15s doing a whopping 11,000, almost 500 out there. So pick your strike, pick your month. On the call side, chances are you had some paper, particularly out-of-the-money call strikes. And that was the case out here in good old Caesars. Let's check out the year and just see. This one actually doesn't have that hard to interpret what was going on in these. It was just a lot of it, which is also worthy of note in and of itself. Let's go back and see what's been going on in good old Caesars over the past year. And about a year ago, they were right around $11, $11.15 or so. So substantially higher there today. They got as high up as about 14, looks like 14.5 or so back in February. You know right when that happened, listeners, right close to the 5th, about the 1st. They hit their high, and then, oh, surprise, something happened. Took them off their pedestal a little bit. But now it looks like perhaps their rally is coming back. They got as low here as about 10.48 or so, or in that range. So, yeah, nice little range post-February 5th, now coming back on the upside. Mr. Rock Lobster, were your crazies in the pitch chat? Were they slinging themselves some gaming calls today? It seems like everybody had the fever today.
Somehow I missed this one because what's weird is I thought a company like Caesars, what are they just going to go out and buy all the offshore gaming companies? So I guess it is room for them to expand online and making this legal. I guess there was a quote from Mark Cuban. He says like all of the big professional sports teams probably just doubled in value because now you will be legally able to wager on them. Which means I'm sure those teams are going to want a cut of that action at some point. I'm just thinking out loud here to see if that actually happens. So I did miss this as a trading opportunity, I have to admit, though, but it does look like somebody wants themselves some gaming stocks. I can't see how this is going to be bad for all these in the long run. It just depends how much you got to pay for it. How much you're going to have to pay for it. I'm just looking at Sands and everything else. So, Las Vegas Sands was actually down a little bit today. So, we will see how this all, let's just say, how this all plays out. But I missed the easy money in Caesars there.
I would be surprised if these sports books are going to be parting with any of that wagering money very easily anytime soon. Oh, we're the Cowboys. We drive a lot of wagering on us. We should have a piece of that. Good luck with that argument. Oh, sure, we'll give that to you. No problem. They may get there eventually. I think Cuban, not always known to open foot and insert, or mouth, I should say, and insert foot. And maybe he's talking a little bit of his book there. He would love a piece of that at the Mavericks. I don't see that come there. That's a long way down the road here. If they had a piece of that, you're right, though. That would certainly, I mean, heck, that's why so many people like to watch sports, right? Is they have a little bit of skin in the game and makes it fun for them. Look at all the Super Bowl wagering alone. How many times have you been told, oh, your office pool is illegal? So now there you go. You don't have to worry about Jerry in the corner cubicle in his little pool and you guys all getting arrested for breaking the Las Vegas, Nevada monopoly on all things gaming. Let's move on to some other areas. We've got our old friend. Haven't talked about this in a while. This one's been around a few times on the old odd block. This is Teva. No, not the maker of those funky or outdoorsy sandals. No, this is Teva Pharmaceutical Industries Limited. This is an ADR, ticker symbol Teva, T-E-V-A, closing today, $20.38, up about $1 and change, or over 5%. So not a bad day for good old Teva. You know, these pharmaceutical names, they rally on a dime, and we saw some of that today. This name averages about 34,000 contracts a day, so very robust volume for an odd block name. Today, doing a little over 4x that, about 128K, hitting the tape, about 2-to-1 calls over puts. But we ain't looking at no puts today. Nope, listeners, we're going all the way down, scrolling on down to the SEP contract, where we'll find one of the Rock Lobster's favorite trades. It looks like this was our old friend, the line in the sand puts, going up 15,000 times on the SEP 19 strike. Paper looks like blasting them out for the tune of $1.19 out there. Open interest non-existent pretty much, so opening paper here on these SEP puts. This is a pretty tight market, but it looks like they're hitting bids, so I'm going to go out and say that this looks like definitely opening, clearly, and looks like someone hitting a bid to draw the old line in the sand. Let's look at the old chart, Mr. Rock Lobster, as we are wont to do, and see how that line holds up. And about a year ago, Teva was about $32, 32.5 or so. And then they had some rough water starting in August of last year, where they kind of dropped well below 30. Got down to, back in November, they were trading $10.85. So, yeah, they had some very rough waters post that, dropping by over 2/3 at one point. So not a good run for them. Then they've been on kind of rally ho mode since then, got up to about 22 and change, and they've kind of been vacillating around this low 20 level since December of January, really, of this year. So it seems like Mr. Rock Lobster, someone coming in and saying, yeah, I like this 19 strike. In worst case, I buy myself some stock for about $18.80 or so, which, looking at this chart, those could be, about nice 8 handles in your face. So it's not exactly a risk-free trade. What's your take here on, I know it's one of your favorite strategies, but about perhaps this one, this aggressive line in the sand through September on the SEP 19 puts in Teva?
Well, there's a couple things on this one. One is, full disclosure, I am long this one quite a bit. I've been following it for a while. I think it's a very cheap generic drug play company. I didn't get it at the bottom, but I kind of did my sort of put and stock back spread, and then I sold the puts out on the way down, and then I've been kind of living the high life on the way up. And I actually bought more premium today. So what I like the concept. I like being long this one. I certainly don't want to be short. I thought also that Warren Buffett took an interest in this one maybe 6 weeks ago or something. It kind of ripped to 21 or 22. But I think the vol is so low in here, it's probably better to buy calls, but that's in my opinion, only just my opinion on that. But but it looks like I can't disagree with the sentiment, but I just, the vol is like 33% or 34%. It's just way too cheap for me to sell. So I'd rather just buy calls, to be honest. They're just dirt cheap. 21 calls are like $1. July 21 calls today were like $1.06, and the stock was trading like 20.65. I mean, you have like a 2.5 month call for just barely $1. So it looks inexpensive, but I do like to play. I could actually kind of see a risk reversal thing happening. So Maybe it's the granddaddy of all investors selling some puts in here. Who knows? But overall, I have to say I like the long, but I'd rather do it buying calls.
Look at you buying your juice, not getting your juice for free. What happened? What happened to the old rock lobster I knew so well, sir?
When you can buy the juice at 30% vol, you don't worry about it too much.
So buy juice for free or at a steep discount. That maybe you should amend your tagline there, sir.
I'll amend it in the book. Doing stuff.
Yeah, you're doing stuff and getting your juice for free and or at a steep discount. Doesn't ring as well. Maybe just leave that last part off.
It's too many words.
Then you're getting a little bit crazy. Speaking of crazy here, let's get on to our last name, our last victim here of the day. The 65s look like they also went up with that. Interesting. This is QUALCOMM, our old friend QUALCOMM. Ticker symbol QCOM. Closing today, 56.74, up about $1.50 or nearly 3%. So a decent day for good old QUALCOMM. This is a name that does about 60,000 contracts, actually 61,000 contracts a day, doing almost exactly 2x that, about $1.20 out there today, about 2.6 to 1 calls over puts. And what caught our eye was it started off what looked like a straight up bullish risk reversal. It was the July 50-60 risk reversal going up, looks like about 8,400 times. Paper looks like they're selling the put 61 cents, buying the calls $1.35 above the offer, actually. It's coming in late on those. But if you dig a little bit further into it, you see there's also another leg going up out there, which is, if I could pull up my screens for me. There we go. So many tabs up. Sometimes things get buried. Also looks like not quite with it, but pretty commensurate to it. The 65 calls also going up for 36 cents. A bit late on that bad boy there as well. Nice mid-market play there. This could be a bit of a kicker. If you look at the total paper on the day, we got about 22,000 of the July 60s, 11,000 and change of the July 65. So looks like perhaps a good 1x2 going up there. All of that financed by a little bit of the 50 puts going up a total of 13,000 times here. So a bit of a funky, looks like maybe a ratio call spread. With a hence bias 2-to-1, so long 2, short 1, financed by some nice put juice over there as well. All of that seems to add up to some nice bullish love out here in QUALCOMM. I didn't see the news today on what was driving this. Could just be more China love for all these names out here. What was driving this madness? Let's look back over the past year. Has been a bit of a turbulent year here for QUALCOMM. About a year ago, they're about $55 even. They got as high as, about 68, pushing 70 back in November, and then again in January. And then we all know everything fell off a cliff in February. They kind of followed suit, got back down as low as about 48 and change before kind of in the last few weeks going rally home mode again, back to where they are right now, a little bit shy of 57. All this a long way around to saying, Mr. Rock Lobster, is your spidey sense telling you that this is indeed perhaps a bit of a bullish call, a 2x1 here in QUALCOMM, financed by some puts, or are you feeling something else as a foot here, sir?
I'm feeling this is kind of go-go-y. Isn't QUALCOMM possibly being bought out by the Broadcom guys, the Avago, that guy that just keeps gobbling up all things chip? So. I think this is more of the same on that. Lots of gobbling.
Yeah, you're right. Yeah. Our buddy here, the Flowmaster, he's clearly listening because he's chiming in the chat room saying they also did it in SEP 60-65 call spread against the 50 put. Did that 5,000 times as well. So someone's loving themselves some bullish risk reversals. So much they're doing it on a ratio here in July, and even 1-to-1 in SEP. Either way, looking to perhaps retrace the good old days of not too long ago, a few months ago in QUALCOMM, when they were 68 and change. All right, it's Monday, listeners. It's time for Uncle Mike to take the reins and talking about a little bit of, actually, it looks like some funky commodity stuff in store for you guys. A little bit of skew talk. So here we go, a little bit of the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block, the portion of the show where Uncle Mike comes on down from not quite a mountain in St. Charles, more of a slight hillock, and he dispenses some options wit and or wisdom. Uncle Mike, you know, everyone's talking crude these days, talking gold, a lot of commodities on the old brain. Crypto, if there were indeed options on those, would certainly be part of that equation as well. All that a long way around to saying, I think, Mr. Uncle Mike, I got the feels deep in my bones here, the hair in my back of my neck standing up to talk about some commodity skew. Are you with me, sir? Are you feeling it as well?
I am feeling that commodity skew today as well. I think that let's just talk about skew. Is there ever a day it's not fun to talk about skew?
Let's just do it. We'll set aside another whole extra hour. Let's just go.
Absolutely. What is skew? Well, let's talk about how skew exists, why it exists, and perhaps how you can maybe do some trades off of it. Before 1987, in the stock market anyway, skew really didn't exist as it does today. And what I mean by that is I'm just going up on a random option chain right here. I'm going to July for SPY. And right now, SPY is trading at, let's round it up to 273. It's at 272.98, but let's just round it up to 273. And a $10 out of the money put, for example, the 263 put is trading at roughly $2.50 if you want to get the midpoint. And if you go $10 above the money to the 283 level, it's only at $1.05 is the midpoint. Now, part of the reason for that is that it can be for a dividend. I'm actually have not looked to see when the dividend is, but the point not hugely relevant by any means with what I'm about to say. But why isn't it at a price to where the price, because the SPY does not pay a large dividend? Sorry about that. But why is it to where something $10 out of the money to the downside is so much greater of a cost than $10 out of the money to the upside? Well, the reason is that there's more fear in existence of the market crashing than of the market melting up, for lack of a better term. So in other words, before the 87 crash, a lot of giant hedge funds, giant institutions, they weren't necessarily buying catastrophe puts. And the reason for that is that they weren't really that scared of a catastrophe. Now, of course, after the 87 crash happened, there was a lot more fear that came into the market of a catastrophe put, and there were a lot more buyers of them. And so because of that, since 1987, there has actually been much more of a skew to the downside than there is to the upside on the market as a whole. So that's kind of the first version of how the skew exists. Now, you won't find that quite as much in individual names. Now, is it possible? Oh, yeah, no doubt about it. But with that being said, stocks can melt up. Let's say that all of a sudden XYZ stock finds the cure for cancer, or even better, finds a drug that can help you live longer that they can continue to get a revenue source off of if you have cancer. If such a thing is the case, then that stock's going to go up instantly. And so that can happen in pretty much any stock for any reason, just depending on what their industry is. So there's not quite as much of a skew, although it can exist in certain stocks on individual names as it is on the market as a whole. The market as a whole is not going to have quite the risk of a melt up as it is of a crash down. So that's usually the reason why it exists within the market as a whole, in SPY or SPX, whatever the case may be. Now, in the world of commodities, it's kind of a different story. There's a reverse skew that exists. Now, I've talked about collaring silver on this show many times and how we actually use that. Now, of course, the biggest problem I've had with collaring silver is that it just doesn't move at this stage. But at some point, I think it's going to actually go up a lot higher. But in the commodity world, you have the opposite effect, meaning that if something bad happens in the commodity world, then commodities typically rush up. So, for example, you'll find similar results in silver, except kind of upside down. The out-of-the-money calls will be more expensive than the price of the out-of-the-money puts. And so because of that, you have a reverse skew with which it exists in commodities. Now, how do you trade this? Why does this mean something to me? Why do I even care? Well, you have to have an understanding of it for a variety of reasons. The first one is that as markets go lower, you have to have the ability to have an understanding of the fact that because of the fact that this skew exists, at least in the S&P, then the value of the puts is going to accelerate at a higher rate than what you might be prepared for it to rise. So in other words, let's say that the markets go lower because of the fact that as markets go lower, a lot of times, not every time, but a lot of times implied volatility increases, values of puts will go higher at a rate than you expect them to just based on what the delta is. Because of the fact that there's going to be so many more people trying to buy insurance while the house is already on fire, the value of those puts is going to be higher, and you're going to have that understanding of it when you're actually hedging yourself. Now, by the same token, as the stocks go higher, as the S&P were to go higher, if you have call options, they might not accelerate at the rate with which you think they should based on delta, because of the fact that more people are selling options and getting out of them because there's less fear in the market as the market's going higher. More people are selling covered calls, perhaps, whatever the case may be. So in closing, I want you to just have an understanding of that the skew, it does exist, and the quick way with which to kind of just observe it, take a look at it, is to actually take a look at what the out-of-the-money puts are trading at and what the out-of-the-money calls are trading at, the same distance from the underlying strike price. And that is the strategy block for today, May 14th.
Thank you for that, sir. We got a few minutes. Let's see if we can get a couple of questions in with a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you guys take the reins. Sometimes we ask you guys questions as well. Let's see here. We asked you guys last week, the vol space hot, very hot right now in terms of new products. And we got some old ones coming back too. We got Spikes, talked about them in depth on Vol Views. That's hitting the network pretty much as we speak, so you can check that one out there. We also have the Volvex products, the Real Vol, and or none, as in which one can replace VIX or have a good chance of stealing some spotlight, some thunder from VIX. I think a little bit of last-minute market manipulation helped the Voldex folks rally there, 44%. They discovered that, and they were pushing their people towards the poll. But we always said it's Chicago-style voting. Vote early, vote often. So ballyhoo to them for taking the lead there. Was going to be Spikes was looking pretty good, and so was none. There could be only one VIX, but Voldex taking it. So I guess I'll have to get them on the old Vol Views show to check in on what the heck's going on with that product. It's been a while since we've heard about it, but I'm chatting with the NASDAQ folks. It seems like we may be hearing about it again pretty soon. Speaking of new products, we asked you guys this week. CME just announcing this morning, all you crypto heads out there keep hitting us up. When's more crypto? When's more crypto coming? Just this morning, CME announcing a new Ethereum or Ether, pick your poison, index out. Not quite a product, but more of an index, like their Bitcoin reference rate. This is like the Ethereum reference rate. So that expands the universe of crypto indices, but we all know you guys all want products. Give us some actual tradable products. So I thought we'd ask you guys, what do you really want to see next in the crypto space? Do you want your Ethereum futures? Not just an index, but the futures? Maybe Ripple futures? Maybe LightCoin futures? Or are you hardcores looking for some Bitcoin options? And given our audience, not hard to not hard to argue where you guys are going. 73% so far saying they want themselves some Bitcoin options. 13% going Ether futures, and a split for the rest with Ripple and LightCoin. So we got the rest of the week to vote on that one if you haven't already. Got a interesting comments here. Someone sent this in. I think this is from Stock Twits. Guy Sonic Merlin saying sent a screenshot of his my Monday SPY puts, and he got this crazy screenshot that people are sharing with us of he had 1,332 SPY 265 puts. that he put in for an average cost of $1.87, and as of this screenshot, they were worth 3 cents, and this guy was down that day $53,000 in total of almost $250,000. I don't mean to laugh at his loss. It's just the craziness. This got into a lot of conversations about sizing and position management, and maybe perhaps when not to follow up a bad trade with an even worse trade. I don't exactly know. I don't know all the details of this. They didn't send us that. But still, just in general, A, we feel your pain. That's a pretty rough one. Hopefully you've got the money to cover that, and that it doesn't wipe out your kid's college or anything else. B, Mr. Rocklops, you probably have seen one or two tweets or sob stories, horror stories like this before. Maybe not to this degree, but this is probably usually the port where they probably come over to somebody like you, right? And say, hey, I need some help with this stuff. Is that what you usually see?
That's usually about, you're right. That's usually the point where people come to us and say, we need some help. We need some help with this stuff because we're not doing it right. So, of course, I'm here to help people with trading, trade management, and all of that stuff. And which is, I think we have a lot of really good traders in our pro room, and they spend a lot of time just closing trades and risk management. I mean, that's kind of, I think, what separates people who make some sustainable money versus those that don't. So you can't forget about that part, because it's probably even more important than trade selection. Because if you never close anything, either when it's making you a lot of money or when it's kicking you in the butt, that's how you end up having problems. So I would say, yes, we have seen those before, and we have even repaired some of those in the past. But that one with just a long put where it's all gone poof, that's a tough one. At this point, you might as well just wait.
You can't. Yeah, you got the 3 cents. I guess you can close it out. But at this point, you got your lottery ticket you paid dearly for. Maybe, you never know. Maybe a little more saber rattling. Uncle Mike, this calls me a time when they call someone like you and say, hey, I don't want to deal with this crap anymore. I want someone else to roll my puts for me. Maybe you put on a put spread instead of a put, so I don't lose all that off the bats. I'm sure you probably gained a few clients from stuff like this as well, Uncle Mike.
I'd be lying if I said it's never happened. Yeah, I think that there's certain things to where in this situation, we've all been there as traders. There's no one, the only people, I'm going to kind of just change a statistic from something else that maybe we've heard. It's estimated that 98% of all traders have had a really bad trade, and that the other 2% of traders lie. That's my thought on it. But, you got to be able to recover from it, and hopefully in this case, this person can.
Yeah, we feel your pain. Hopefully, maybe you listen to a show like this or two every now and then, or you call Uncle Mike or Rocklops or someone else, and they walk you through some stuff, and then you hopefully avoid days like this in the future, which is kind of the whole point. All right, let's keep on rolling to our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Still a few things to keep an eye on for this week. Of course, you mentioned all the macro at the top of the show, and that could move in any direction. The endless erosion of VIX and the VIX futures and VXX is also something interesting to keep an eye on. Will that continue? Will it get into, I think the Rocklops just said zone negative 64 is the next zone it's approaching, so keep an eye on that. As well as, of course, still have some micro fun stuff as well. We mentioned Cisco on the show as well. They come out after the bell on Wednesday. Good old, that was like Jack in the Box coming out Wednesday as well. Walmart before the open on Thursday. A lot of those names broken down. Home Depot coming out before the open tomorrow. Hopefully you already played there if you wanted to play. And indeed, all that broken down on the good old ORATS earnings report. Check it out on the website there, theoptionsinsider.com. Let's go back around the horn. We'll start with you, Uncle Mike. What is on your radar for the rest of the week, sir?
Well, I want to see if this rally can continue. Just we've had such a bull market these last 10 days. I'm just watching to see if we do have the dreaded pullback that everyone always talks about, or seeing if we can continue with it. I think the next level that I'd like to see us break through, at least in the SPY world, I'd like to see us go through the 275 level and see if we can stay through that. And then I think the next stop would be 280, and then of course 286, where our all-time highs were.
There you go. All-time highs from the bull. Looking for those. Not surprising, really. There, Mr. Rock Lobster. What's on your radar for the rest of the week, sir?
We are looking at again, vol. Do have some bigger earnings like Walmart. That's another one stock I like as a potential. Let's just call it competitor to Amazon. I figure there's got to be at least one retailer that might compete with them. Looking for that. Looking to see if anything does brew in the Mideast. And to be honest, just looking at a lot of quiet. And for the most part, I'm seeing lower volatility across the board, and especially in a lot of single names. Healthcare, biotech, stuff like that. So that always gets my little spidey senses flowing for stuff like that one. Juice gets cheap. And like I said, with the Tiva stuff, I'm interested in maybe scooping a little bit. So we'll see how it all goes down.
Stay tuned for the Rock Lobster's forthcoming book, How to Get Your Juice for Free or for a moderately small amount. That's that subtitle still being workshopped there, listeners. But stay tuned for that. All right, that music means, unfortunately, we come to the end of another epic journey through the old option block. Before we go, let's go back around the horn one last time. See what people got cooking. That may intrigue you. Uncle Mike, I know you're cooking up a lot. I'm looking forward to talking about it soon. But in the meantime, what can folks do when they want to hit you up, sir?
Oh, for sure, for sure. For all of you local people in the St. Charles area, May 31st, we are going to be having a presentation at my office with my meetup group, the St. Charles Option Club. The St. Charles Investing Club. We're going to talk about the simulated index concept. Come on by and check it out. And if you want more information about it, send me an email at mtosaw@rcmfs.com.
I have it on good authority that Uncle Mike will give free Skippy's Euros and lemonade to everyone who attends. So get on over there, have a good dinner, if nothing else. And then maybe learn about yourself some investing while you're there. Head on over, hit him up, mtosaw@rcmfs.com to learn more. And last but not least, Mr. Rock Lobster, what's cooking in the land of all things the pit? And was that correct too? Is it zone -65 coming up here in the VIX?
Well, I think sometimes in the vol products, it can feel like that on the downside. No, zone 1. It's zone 1, gosh darn it. And what's coming up? VXX made easy if you want to learn how to trade them. That is your opportunity. Go to our website, and I have a link for you here just right now. It is optionpitmembers.com/easyvix/. So go find that, go sign up, and learn how to trade these vol products and avoid the vol-apocalypse.
Always good to avoid the vol-apocalypse, listeners. All right, check them out, optionpit.com to learn more. Maybe you learn zone 1, or maybe he does the zones into zone -65. I'm looking forward to that. On behalf of the Rock Lobster and Uncle Mike, and indeed myself, I'll thank you all for listening, for downloading, streaming, subscribing to the podcast, asking questions, listening to the live stream, whatever the heck it is you do to get the show. We thank you. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.